This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions.
Hello, friends. It's November 3rd, 2021, Wednesday, FOMC day. Let's get into a little bit of a recap about the Feds. I think we all know what's going on in the sense that the Feds are kind of irrelevant at this point. Yes, they are tightening. Yes, they are pulling money out of the bond markets slowly, coming from 120 billion a month. Now they're down to 100. They're in denial about inflation. Here is my meme about such. I really don't think the Feds. I don't want to go to YouTube. The Feds just keep saying transitory, but they're just ignoring the reality. There's tons of inflation. They're stuck. Study Japan. They've done this for years. I don't know the solution. I just know that I gotta have hard assets, and I really push people to real estate. I know I might be tooting my own horn because I'm a real estate agent, but I do believe genuinely that housing will be the best investment during this inflationary times because commodities will be very volatile, like lumber, like all the other major commodities. They've been all over the place. Housing, people need places to live. There's such a shortage. I could get into it for a whole topic about the housing shortage. Since 2009 bubble crash, we are building significantly less number of homes per year than we used to. We used to build 20 million plus a year. Now we're somewhere in the 5 to 7 range. It's a big shit show. And now that people can live wherever they want, housing only becomes more valuable in the places you live. I live in Colorado. If you want to invest here, I'll gladly help you. If you want to invest anywhere else in the country, give me a shout. I will refer you to people who can help you out and put you in touch with, the best people to do such. I mean, it's a have to. You're not going to get good residual fixed incomes from the markets. It's got to be homes. I mean, that's why BlackRock, Blackstone, everyone's buying houses. Rents are going up. Let's just keep it simple. I won't go ranting on that, but here's the Discord room if you ever want to play around. I'm going to start putting the back to basic videos in a room and just going to keep everything nice and clean and tidy. You can come around, see the education, chat with the people who've been here a while. Anyway, let's move on to Bitcoin. A lot of people have been asking me about Bitcoin. I personally don't own any. People say, well, then you're an idiot. You shouldn't talk about it. Well, I've given a lot of good advice on Bitcoin, even though I don't own it, because it still trades like anything else. It all is based upon supply and demand. Talked about 30,000 range. If you would have bought it, the first mouse gets in the trap pop, the second mouse gets rewarded with the cheese, and then he gets straight high, goes basically higher. I love channel bottoms, W's, head and shoulders bottoms. Again, don't have to necessarily be first. If there's V bottoms, well, you're fucked. But the odds of V bottoms, it just really depends. But as long as you're buying low, you risk management comes into play. You're good. Right now, high and tight, not scaring me. Doesn't really give me any desire to do anything. I would say 57,000, whatever, blah, blah, blah. It has to hold. If not, the convergence of trend lines around 50,000 seems like a very obvious buy. If you got Bitcoin questions, I will go more into it, but I could see easily 100,000. That seems very logical. 2 times the range. This range is 70,000. You add 70,000 to 30,000. You do the math. That's 100,000. Keep it simple. That's how simple sometimes the projections can be because we're just doing the Fibonacci natural order of numbers, sizing, whatever. It's a whole other video in itself, which we'll talk about at the end. Let's go to the charts. Let's start with the SPY. Talked about getting to the 2 times range. Today's action, not really anything. Seasonally, we're in bullish times. Tomorrow is seasonally bullish. This week is seasonally bullish. Let's just keep it simple. I mean, you have a bunch of older channels and trend lines. Could we get to 500 by the end of the year? Anything's possible with easy monetary policy. I mean, the money has to find a home. It can't stay in your savings accounts, not staying in the bank accounts because there's no returns. This is how the feds fuck themselves because people stop becoming savers. Everyone becomes an investor because you cannot make a decent return in a bank account. You're basically losing money if you take into effect inflation. Another story in itself, another rant for another time. QQQ. NASDAQ looks like 400 is coming. Talked about this, is holding up really well. Keep it simple. Good old friend, the GLD in gold is down this morning. Talked about if it got into this free money retest area, it would be potentially a buy. Feds are still printing money. This is a big compression pattern. Kind of has two teeth here of a W. What's coming here? Is this some sort of super wide head and shoulders, like shoulder, two-headed monster shoulder? It could be. Again, keep in mind, longer something bases and chop, the bigger moves that usually come out of that. Gold setting for a big up. Everybody hates it. Well, guess what? At the lows, that's how everybody feels. And at the highs, everybody loves something. I like gold. I like Bitcoin. I like silver. Whatever. We'll get into that at some time, too. Another time. Silver. Hey, well, look at that. Opened at the lows, closed at the high. Nice little gap down. Pull up the 10-minute. You can see there was buyers. You could have bought here, or you could have bought the retest. My 10-minute candles, time frame trading video I just did. If you want to check out, talk about how to trade intraday. You're buying down here. You had a nice pop into the close. You should hold it if it closed near the high of the day. Continuation usually happens when you close at the high of the day. At worst, get something like this and some chop. But if we are really coming off of a low, it should continue higher in time. Swing trade, day trade, know your parameters, know what you're thinking, know what your projection are. My star play of the day, GDX. What did I say? If it got down to the 31 area, screaming buy, I would have done it. If I was anyone else with their money, bottom line, head and shoulders. Here's your shoulder line. You buy it at 31. You give it a stop. It looks like it's going higher. You zoom out, you can see the downtrend's broken, but downtrend breaks followed by head and shoulders bottom. I dig it. I like miners. This should be a nice move up if it is setting up. Seasonality into the first quarter of every year is strong for the metals. Close the end of the year strong. We will see more continuation. Big swing trade. If you could see my face, you'd see I am cheesing about this one because it could be setting up for a monster run. Junior miners are holding extremely well. The junior miners are the more leveraged miners, and look at that. They're not even getting back down to the retest range in the 40s. They're holding up extremely well. Something is going on here. Someone knows something. The gold miners that are smaller, market cap, are more leveraged to the gold price. They're not letting them fall like the GDX. And look back at them. Look at the positions. One's more of a head and shoulders return, retesting August lows. The GDX now is not even close. It is a solid almost 10% higher. Leverage gold names are up. They should lead. Keep that in mind. More knowledge just dropped for you. Just trust me. That's a good sign if you own gold or the miners. Those should be leading. X or W pattern. Steel is going higher. I don't give a shit if what China does. You can't get. It's hard to source steel. Bottom line, prices should go higher. It's being used in all sorts of things. Maybe it replaces lumber, in certain aspects of building. Bottom line, keep it simple. It looks strong. W pattern. If it backs up, set your stops. Could it retest down here? Could it fill this gap? Yeah, but if it's going higher, it's going higher. You got to trust it. Let the time and the action play out. Roblox, it looks like it failed right to the 20-day. Backed off. Needs a hold here. If it retests here, I would not be surprised, but this is the kind of action, I was recommending back in May before it chop. You had some volume there, then it exploded. Maybe we're looking for something. Maybe it's just waiting for some news. Maybe more shutdowns, kids homeschooling. I don't know. But kids are using Roblox. Google Analytics show that that's what's some of the most Googled things are about Roblox. I believe in the company. I think they're going to do well. But you know what I believe in more? My stops. If I'm wrong, I'm out. I don't give a shit if they make all this money and do great. If the stock doesn't perform something, it means something in the future doesn't look great. Tesla, oh no, it held up. I think I talked about this in my No, I did talk back to basics video, not why you don't need to trade earlier. It's going literally nowhere, and then boom, breakout. You could have played very simply, just waiting for the Fed release, because that's what it basically did. It was just going nowhere. This is all a wedge pattern and hair pulling out. Boom, Fed's, everything's good, we're gone. And look at that, you made 50 points. If you waited here, you just wasted time. If you bought near the lows, well, maybe you're great and happy with it. You didn't get back to it, but this was the easiest way to trade it. Wait for the breakout. 10-minute confirmed it. Talked about if you own this, you should be taking profits. It's running up, going higher. Could it get 2 times range is kind of the projection. Could it go even higher than that? I have no clue how the stock is even pricing anymore. Maybe it's an inflation hedge because they have future product that people demand. That's guaranteed. I don't know. Keep it simple, though. If you are holding 100%, the higher it rises, then you have no opportunities to buy dips. Talked about this with folks back last year, and nobody would listen, and then it got crushed. And then you could have been gladly buying, but again, the first mouse gets chopped up, second mouse gets rewarded. An ugly W pattern, and ultimately led to higher prices. Love Elon Musk. Think he's a genius. Think in time that could go higher. I just worry that at some point there will be a bigger pullback, that if you are 100% owning of Tesla or have not hedged with covered calls, when it does pull back, you have no ability to buy. You have no bullets to fire. So keep that in mind. That's why I talk about it. That's why I say probability game, not all or nothing. Anyway, broken reminder never ends. You'll hear it over and over. Apple, be aware of the head and shoulders top failure here. If this thing gets invalidated, this is going to break out. I would think you could get up to this 170 area. When you have a head and shoulders top that gets invalidated, all the bears, all the shorts, all the sellers wrong. Months of people being wrong, giving up. Now they'll break out. It goes higher. It's really simple. Go to Google, study invalidated head and shoulders patterns. They are rocket ships to higher prices if they do get invalidated. Just like if you had a head and shoulders bottom and then you break the head, goodbye. End of story. Getting crushed. MicroStrategy. Hey, Wedge talked about this, waiting for the breakout. You got the breakout, and everyone yesterday said, oh, you had a little bit of a wick. It doesn't look that strong. Yeah, great. Look at the candle today. Opened at the lows, closed at the high. Pfft, it's fine. Inside day. I mean, I wish it was easy to predict. You wish every stock went from A to B in 0 time, but the reality is it doesn't. It takes time. If this thing is bottoms, you're gonna go a lot higher. You mean, you can look at the old highs, the Fibonacci's. I mean, the 2 times range brings you back to the old highs, 1400. Why not 1600? Why not? Who knows? This company has the ability to turn into a rocket ship if Bitcoin gets going. We all know that. Keep it simple. Let's end with some of the basics that we talk about. The dollar. I said yesterday, this candle had me a little nervous, had volume and closed at the lows. This may have just been a dead cat bounce before a break in the dollar, and that's what sometimes trend lines do. They get down to them and they back up, and then so that's why you keep it drawn. If it not, we should go higher. Why the dollar's up, I don't know. Piece of shit. We just keep printing money, but we print less money than everyone else, I guess. So we're considered the reserve currency. It's not fiscally sound or responsible. Blame the administration, blame everybody, but whatever. The people in charge are creating inflation because guess what? It makes them richer, makes us poor on average, because unless you're hedged, you're not liking the pricing pressure that you see every day. So TLT, let's end it there. Oh, bonds dropped today. We talked about getting up to there. Maybe it fills the gap. Maybe today's news was just a matter of doing a little trappy trap. Again, if you follow the bond markets and the mortgage markets, they may have moved barely today. Nothing that affects the economy. I would be willing to bet there's really nothing going on. Bond market should be, bonds should be at much lower prices if they actually traded like they should. Meaning, for years, you had much lower yield, much higher yields in the bond market. I mean, I remember 5%, 6%. TLT was way down here. How they keep this manipulated up, Who knows? But just keep in mind, at some point, will we get higher rates? I think so. Could this be a head and shoulders top? Maybe. But keep in mind, if it gets invalidated, what's going to happen? Rates and yields could go lower. What would push the market to a lower yielding bond market? Or I mean, loan markets yields getting lower, so it makes easier for easier payments on your loans. We'll see. This is take number 3. I apologize. I definitely did not record the last 2 by accident, messing this up, so I am a little brain dead. But let's end it there. I'm going to go more into the Back to Basics course. I hope you guys check that out. It's beginner study courses on what I look at. There's going to be a lot of topics. I did time frames today. There'll be risk management, Fibonacci's, moving averages, psychology, day trade, setups, how I set up for the day. I mean, you have a question, you want an answer, drop it in the comments below. I'll do it. Back to basics. There's a lot to know. It's a foreign language in itself, and the more I do these videos, the more I realize that even though there's a ton of people that I'm friends and family with that get this stuff, to really help and educate, I got to break it down back to the basics. The fundamentals kill. I've always said that. You got to do a few things well and understand a few things. The master of everything is the master of nothing. You can't know everything about every stock. People who pretend to be Jim Cramer, they're wrong a lot. So why not try to just focus on the things that you know and just be right on those versus trying to be right on everything? I love Jim. I've been following him for 20 years. Mad Money is hilarious, whatever. But it's the reality is that you can't be so thinly knowledgeable about everything. I'd rather know, hey, these 10 stocks I'm talking about look interesting. I'm going to follow them. If they move, great. Or you only trade a few and then all of a sudden something pops up that you've never seen before and you're like, I should follow that and focus on that. And you can do that versus, well, if you have a stock trading watch list of 1,000 stocks, you can't really know everything about them all the time. So you got to keep your focus, keep a journal, stay on top of the things, and you'll get there. But back to basics, that'll be something we talk about. Let's throw that one, having a trading journal. People who know me know I have a crazy trading journal. Anyway, Dan Max at EXP Real Estate, aka the trading agent. I am done. I appreciate everybody and look forward to providing more content and help out. Subscribe, like, throw comments in. I'm going to do my best to answer it. It's free information. Take advantage of it. Talk to you guys later. Bye-bye.
Thanks for watching. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.